come from the SACCO sector. As you said, we are facing a kind of competition between the SACCO sector, and because our members also, at some point in time, they also secure funds, only fund from the commercial banks. Before I go to the question, let me go back to, there was a study conducted by Fintech, which shows the uptake of financial services from SACCO in Tanzania is very low, less than 4% of the study. It was debated, but of course we can't deny the fact that the SACCO sector uptake of financial services is still low, and this is a challenge. So how do we go about now, we as CEOs or decision makers in SACCO sector, how do we go about to compete? It has been said many times, we in SACCO sector, we need to improve our services, to innovate in order to have, first of thing, accessibility of services and inclusion. And what do I mean by this? Our services basically are saving and credit. So much as we can, we need to simplify processes for members to save and borrow. I'll give you an example of what we do in PCCP SACCOs. Over the last year, we have been digitalizing our operations. And one of the operations is to register our members and our app in the Play Store and iOS. So from these services, we have been capable to partner with other financial providers like banks and the mobile operators. So by doing so, we are going direct to access what our members can access from the banks and other financial service providers. And so we are able to compete, and we increase the membership over the last 2 years by more than 500 members. And of course, we are up for more and better services. And this is my call to all my CEOs and colleagues in this sector. We need to digitalize in order to compete with banks, even other financial service providers, apart from banks, including private lenders, because we also compete with them. Thank you.
Okay, thank you so much. And it is good to know that even the SACCOs are not left behind in this conversation. So our next question is going to be directed to Frank Bacha. And the question is, you build digital products inside a traditional bank. Let me ask you something directly. Is the biggest obstacle to scaling digital finance in Tanzania a technology problem, a trust problem, or a regulation problem? Pick one and tell us why.
Okay, so first I should clarify. Banks these days, they are not doing mainly traditional banking. They are diversifying themselves. Now we can partner with Fintech and provide the services, different services. So, for example, now you can see people that can get loan, maybe micro loans, yes, from Fintech, but at the back end, bank is financing this. So the partnership between banks and Fintech provide this flexibility for banks now to shift it from non-traditional bank, where you're waiting a customer to enter into the bank hall and get the facility. Rather now, you can even save a customer of mobile money operators for them to get the microloans. And from the three you mentioned, I should pick trust. The reason is not because we don't have technology. We have technology. We can see that there is a lot which has been done from technology perspective. For example, the mobile money interoperability. As you can see now in Tanzania, you can transfer money from bank to wallet or wallet to another wallet. So interoperability is there. So in terms of technology, that is not a problem. Also, the growing fintech innovation, we can see different apps from different fintechs. Also, even on fintech themselves, they are building super apps. So that is not a problem at all. Also, banks and MNOs, they are investing a lot into financial sector. So in terms of technology, there is no problem. Also, you mentioned regulators. Regulators now, they are doing impressive work. For example, the one I mentioned from the regulator who is support much the interoperability mechanism in the country. Also, there is a strength oversight to protecting customer data, which was an issue before, but now customers, they can have that assurance that their data is protected. Why did I pick trust? Trust is the center of everything. Now, everything which includes transaction, trust has to be in the middle of it. As previous use case presenter mentioned, trust has to be the first on everything. Now, why did I mention trust? We have more than millions subscribers into mobile money operators, okay? Yet, not all they are accessing fintech solutions. Why? Because of the fact that some, they think like when they put money on their mobile money wallets, they can be stolen, or maybe there will be fraud activities within that. So because of that fear, they are not utilizing either mobile money, or they are not utilizing the solutions inside it. For example, microloans, etc. Also, the issue of institutional trust gaps. As mentioned in the morning, there is also corporate solution for mixed bias, but now most of institutions, especially SMEs, they are finding that when they put their activity on those solutions, their data won't be trusted, and maybe there will be fraud activity or scam from one way or another. But when we are looking at the trust, there is a lot that fintechs should do to ensure that the trust is being established to allow people utilize their fintech applications. One is to utilize the artificial intelligence mechanism to drive credit scoring, to ensure that whoever is being enrolled into microloans or any other solution is qualified enough. Also, provide digital onboarding, and also ensure that education is being spread across the market footprint for them to understand that this product can be trusted. Also, as it has been mentioned before, you cannot expect a product to be in the market and be trusted at a go. Rather, it's a process. You need to at least go step by step to ensure that you provide trust within the market sector. Thank you.
Thank you so much. Thank you so much. My next question is directed to Violet. You work on AI-enabled systems and data infrastructure across the region. Africa is currently generating massive amounts of financial data. That is transaction records, mobile money flows, credit behavior. But who owns that data? Who benefits from it? And are we building systems where African institutions control their own intelligence, or are we just feeding someone else's machine?
Thank you, Paul. That's a very great question. So firstly, I'll take a quick poll for everyone, right? I'll give you 2 use cases. So one, the first use case is we have Irene, a farmer, a subsistence farmer in Dodoma. Irene has been farming for the past 11 years, right? Every time it's rainy season, Irene will purchase the seeds that she needs, the fertilizer, and put it into her farming produce. During harvest, because Irene eats what she plants or what she grows, Irene probably does not pay rent because maybe she lives in a thatched house somewhere. that Irene is probably not using the profits that she makes to buy the latest Range Rover or the latest suit, right? So over time, through the transactions that Irene has been making in the past 11 years, you can see the small, consistent compounding growth over time. But when Irene goes to a traditional bank and says, okay, so I have been farming for the past 11 years, this is what I have done so far, the traditional bank will say, this transaction data is not good enough for us to give you a loan, okay? So then now I have, on the other side, we have Mary, who's in Dar es Salaam. Mary has got, let's say, a boutique, right? Mary has been running this boutique for the past 5 years. She's able to have transactions, she uses the bank, uses M-Pesa and everything. But when Mary asks for the loan, there's a possibility, firstly, she will need to pay rent in a new high-end area because she just received, $500,000 in her account, right? Secondly, she will go to maybe the latest or nice lounges around Dar es Salaam. So what I'm trying to give you here between these two use cases, and I would like people to just lift their hands up, it's not serious, is who between the two do you think is a high risk when it comes to giving a loan? Mary, hands up for Mary, the lady from Dar es Salaam. And hands up for Irene, the lady from Dodoma. Thank you, exactly. So this is what we're trying to say, right? When we really look down into our African realities, what traditional banking systems have taught us for a very long time as risk is actually not risk. It's just a different reality from what they know in the Western world. And which now brings me back to Paul about the data. So we can speak about data and AI all we want, but what is happening right now, even if I go back to Irene, Irene has been making transactions using M-Pesa for the past 11 years. But because that data is being harvested not for Irene, it's taken back, whether it's to Russia, India, wherever it's taken back, Irene cannot use that data here to help her get sustainable finance. So what we are supposed to start thinking about now is how do we create our own AI models that speak to the African realities and that we keep here and use it to harvest for the next generation. Because what is going to happen is that we are just going to renew the same cycle we had with raw materials will come back and it will be the same cycle with data because data is the new currency. So, and actually in the past few days, if you've seen with the health loan that USA has been trying to give a few African countries, a few African presidents have actually refused $1 billion worth of money from USA because we are now waking up to the fact that when you have our data, you control the economy. So there's no amount of money that you can give us now for us to give you data that we know now that you will make hundreds of trillions of dollars from a $1 billion loan. So what actually we have to do is to start creating our own LLMs and that actually speak to our realities and not what the Western world told us.
Thank you so much.